Let's bring in now with more analysis live the Managing Director of Market Economics, Stephen Koukoulas. Stephen, always good to see you. Thanks for making the time for us. The Prime Minister described this move in his address as good economic policy. Would you agree with that?
Look, it's really just shuffling the tax scales that were in the original Stage 3 package, and it's skewing them away from the concentration which they were to high-income earners to middle and low-income earners. So the net effect, and the Prime Minister made this clear in his talk, the net effect on the budget bottom line is almost nothing. It's $1 billion over 4 years, which in the scheme of things is very small. But it does give the low and middle-income earners more cash. And we do know that propensity to spend is probably a little bit higher for low-income earners. So the economics isn't huge. There's a social aspect, there's a political aspect, but the macroeconomic aspect, and I've looked at financial markets' reaction to it, it's been virtually non-existent. They're looking at other things at the moment. So the macroeconomic effects are neither here nor there. The social and political aspects and issues of fairness are certainly front and centre of what the Prime Minister and the Treasurer have done.
Stephen, what about inflation? What inflationary impact will those tax cuts have on the economy once they start to flow through?
Yeah, really good question. And of course, inflation is one of the key issues that we economists and the Reserve Bank and the government are focusing on, because we had that dreadful inflation problem over the last couple of years, and there are still really encouraging signs that inflation's coming back under control. The fiscal stimulus, if we can call it that, from the tax cuts, which kick in on 1 July, so in, 5 months or so, have been factored into the RBA's figuring. The RBA, when they prepare their forecasts for GDP, for unemployment and for inflation critically, and therefore decide whether they hike rates or keep them steady, they look at the budget as a given, of course. They don't influence budget policy, but it is the overall size of government spending, government demand in the economy. It's around about 1/5 to 1/4 of bottom line GDP, so it's an important part of the economy. They take the budget numbers, stick them into their economic models, and if that includes the Stage 3 tax cuts as they originally were, which of course have been in legislation for 5 years or thereabouts, they would have been in their forecasts that whole time. So they will be stimulatory, but that was already factored into the RBA deliberations and their forecast that inflation will continue to decelerate.
Okay, speaking of RBA deliberations, we heard a lot in that address from the Prime Minister about the fact that the cost of living is biting. There's no secret there. What is your expectation for interest rates when the RBA does meet again next month?
Oh, look, the cost of living has been the big issue. And one of the surveys that I like to look at in terms of the health of the consumer, the health of the economy, is the consumer sentiment numbers. And it is really weak. Consumers are feeling the pain of cost of living, the interest rate hikes, and maybe even just the early stages of an increase in the unemployment rate. Of course, that's not good for consumer sentiment when unemployment goes up. So I think these factors will feed into the RBA's decision on the 6th of February, which of course is when it meets next. Next week, we actually get the December quarter inflation numbers, and as we've just discussed, they are really important. What that result is will have a very big bearing on probably not what the RBA does, because they're probably not going to adjust interest rates, but it will have an influence on what their commentary is like. Are they confident that inflation is still decelerating towards their target range? And if we get a little bit of a downside surprise in those inflation numbers, because petrol prices have come off a bit. We know that some of the meat and fruit and veggie prices have come off a bit over the last few months. If that shows up in these official inflation numbers, then the RBA might just be a little more confident about the fact that they're going to meet their inflation target during this calendar year.
Stephen Koukoulas, really appreciate your analysis. Thanks so much.
Thank you.